All right, good morning. I see the red bar, so it looks like our sound is good, but you guys can let me know if you guys can hear me. Um, I was checking delays, so sorry I was a couple of seconds late there. Looks like I have a 3-second delay based off the software to watching it on Twitch, so that's actually really short today. Um, YouTube is a little tiny bit behind, as it always is, but not too bad. Typically, it's I get like 8 seconds on my phone, but it's only 3 seconds today. Um, nice, nice, nice. All right, so Friday, last day of the week. Sounds good. Thank you very much. Last day of the week. I can't believe it's the 24th of July already. I'm going to have an action-packed weekend. My voice is a little bit harsh today, guys. Again, we had our final full practice before our tournament. We need to make sure we go 3-0 on this one. So, yeah, got to walk through tomorrow, and then, man, 3 games on Sunday, 8 a.m. So we got to travel an hour away for an 8 a.m. game. Got to be there at 7:30. So, yeah. So we'll see if I have a voice Monday morning. It should be pretty interesting. Hopefully, I'm extremely happy and I don't need to be yelling too much. But you know how it is with little kids. I say little, but they're like 10. Reese, my second born, the younger of the 2 twins, by a couple minutes, he's like 100 pounds. So it's hard to say little, right? He'll be bigger. He'll be bigger than my wife in probably the next 2 months, or at least heavier than my wife the next 2 months. So yeah, so not little kids, but 10-year-old kids. Yeah, 10-year-old kids. So if I have no voice Monday, guys, I'm going to apologize right now. I'll do my best, though. So starting off the morning, really great news across the board. The only thing that came in a little bit light was that the French flash manufacturing PMI. But for the most part, literally green across the board. So it is going to be very, very interesting to see 9:45-ish how the U.S. flash manufacturing PMI numbers come in. And like I said, I mentioned yesterday that a lot of these forecasts were right around 50, right? And 50 is expansion, under 50 is contraction. So, again, there was, and again, the German manufacturing, the forecast was 48, and that ended up coming in at 50. Now, 50 itself, right on the dot, doesn't mean a whole lot. It means that it's kind of like holding. I know it says that it's kind of expansion, but it really needs to be like above, right? It's kind of like Nadex in that sense. But all the other numbers were rock solid. I mean, most of the flash services PMIs, they came in like 5-6 points above, right? You guys can see this. Look at this one. 6 points above here. I mean, this one came in slightly down. This one, again, another 4 higher. This one, another 5 higher. So, some great data across the board. And again, we'll see if the U.S. cannot match the same type. It could be a pretty red day with more negativity. And like I said, as I mentioned yesterday, because of that unemployment number, the media was going to be talking about it all day long. Right, it was going to talk about the negativity, and you can see the markets responded to it. I mean, the markets were down. So we'll see. Pound retail sales numbers were great. I mean, the previous before being 12.3, they expected a forecast of 8.3, came in at 13.9. So that is awesome for the pound. And then their flash manufacturing numbers look great. They are a little bit in the news. If you kind of scroll down to the biggest ones over here. This is the EU. I thought there's UK data in here as well. But I love this one. The EU will have to impose tariffs if US refuses, talks. We can talk, sure, but I think you're a little bit more messed up than we are. We can, if we put tariffs on Europe, then it kind of hurts a lot of their auto. It will crush their auto industry. Because again, we buy a lot of cars from them, and it's not the same thing. Now, also, look at this. We got the big bad. China, again, has ordered the U.S. to shut down its consulate in Chengdu. So, with that being said, what do we expect? More negativity on the dollar Swiss. So, as I mentioned, guys, they're going to kind of poke back and forth at each other all week, and you will just continue to see this one falling. It is in larger supply demand, and that's why we're starting to see this go slower, right? But, again, not surprised by that one. Now, one thing you will notice on the board, again, you see a great, great movement here with the pound dollar. And again, dollar weakness across the board for the most part. I mean, against the CAD, it's a little bit stronger. Aussie, it's a little bit stronger. But one thing that kind of sticks out here is you're seeing great movement here, 74 pips in the last 24 hours on the pound dollar. The pound yen is negative. Well, yeah, because look at this minus 96. The yen is definitely getting some strength based off the U.S., the indices. So there's not much you can do about that one. It's just fallen. So it's always unfortunate when you see this kind of like big flip flop between the pound and the pound, pound dollar and pound yen. Quite a bit of movement. Because again, even against the euro, and again, this is all great European numbers. Even the euro pound is down. Okay, so it just really goes to show how much power the yen has right now compared to the other currencies pairs. And again, that's always considered the kind of news-based trade against because it's always weak. But right now, there's so much power in that one right now, right? It's the leader of the board. All right. So this is what we had going on today. Obviously, tomorrow there's not going to be anything. As far as news, things that kind of stick out. I thought this was interesting. You don't see the Treasury.gov with too many stories, and it's what is the federal government doing in response to COVID-19. So maybe worth a read. This one looked pretty interesting too. The UK private sector output growth hits 5-year high as reopening gathers more. So that's always good. Again, we're seeing that in the numbers as well. This one. The yen looking better than USD as tensions rise. Probably. But again, those tensions are kind of they're going all over the place. So besides that, I don't really see anything else in here. Is it time to buy Europe and sell US? I don't know. They came up with a coronavirus recovery package, but I don't know. I think there's still some contagions that I need to worry about. And like I said, last week we were hearing about Italy and Greece were having problems with the stimulus package, and whenever you're coming up with these things, there's always going to be some type of weakness, particularly in the euro. And if Italy and Greece are doing it, Portugal and Spain are probably going to rear their head as well. And when the U.S. goes into a major recession, the rest of the world tends to as well, and that's something I see coming. Right, that's something that I see coming. So. They're doing recovery packages now, but at the same time, if everything gets really messed up come this fall, right, with election time, will it be enough? Will those stimulus be enough, right? Because if they lose that, that U.S. consumer, round 2 comes back up again. I don't know. I just feel like that could be a problem down the road. All right. But it is good to see German activity high again, and again, it's slowly coming back. This is really what the driving force for the European economy really is. France to a lesser extent, but mostly Germany. That's why they're marked off as high. And again, numbers look great. Services and manufacturing are both now above 50. Well, this is at 50, but so because it's good stuff. All right. As you can see, Saturday nothing, Sunday night nothing, so we don't have anything to worry about before. And Monday morning, again, we'll be back in chart school, but we'll start seeing some U.S. data there. So looks like we're pretty clear for over the weekend. And again, end of July. So again, we're definitely in a very popular, obviously vacation time. So again, I expect this today will be not as high a volume as a normal Friday would be. Can we get jumping at boxing and go over back and forth? I feel like they should play golf. I feel like that would be more fair. Because right now, if you put them inside of a boxing ring, they'd have social distancing. I don't feel like either one of them would ever really make it across the ring. I feel like there'd be heart attacks everywhere. I feel like they should have a golf cart race. They're allowed to soup up their golf cart as much as possible. No governor on there, right? Let them go absolutely crazy with it, and let them do a race around an 18-hole golf course in golf carts. And then the first person gets to pick whatever the first provision of the trade deal is. I think that'd be great. We can see how gutsy they are. Rolling out of a golf cart, alligators jumping out. You do it at Trump's golf, his golf course, right? Alligators jumping out of the pond. I think it'd be awesome. If there's a video game in that somewhere, I'm telling you. All right, so that's what we have. So scanner-wise, guys. So scanner is pretty interesting. Again, we are seeing this Aussie weakness literally across the board right now. Pretty much against everything. And again, we were seeing a lot of, we were seeing Aussie strength a lot, right? We were seeing the Aussie rally back up into those daily supply zones. But now it's been a complete flip. You're seeing everything. We see confirm, we see downtrend setups, and vice versa. Again, we have all red in the Aussie, and then look across. We have basically all blue or, obviously green strength inside the pound, except versus the yen. And again, the yen is just going to smack everybody upside down right now. That's just what's happening. CAD is also taking it kind of more negative than anything else. I mean, you can see here, when it's in its secondary position, everything is blue. In its first position, minus the Aussie, which is more or less kind of a neutral right now, everything else is red. So we have red in the Aussie, red in the CAD. So it shows us that commodity-based pairs, both oil as well as gold, are both heading to the downside, where the pound is definitely catching some strength right now. The euro's doing okay as well, for the most part. I mean, obviously, except versus the pound, which is solid strength, and the yen, which is also solid strength. It's got a little bit of a drop with the Swiss, but again, we know exactly where that's coming from. That's coming directly from the U.S. consulate, that whole kind of barbed back and forth. Like, oh, well, you can close this one. Well, fine, you can close this one. Well, you can close this one too. It's kind of like the you're ugly. Well, you're uglier. Well, you're even uglier. You're even uglier. It's that kind of like 3-year-old battle back and forth. But for the most part, again, what I would say is yen is strongest, followed by the pound, right? Followed probably by the euro. And then at that point, it's kind of like a race for everybody else. Kind of a race for everybody else. I would say that the dollar is not as weak as the CAD. Aussie is probably the weakest right now. I'd say Aussie is probably weakest just based off of where it was on the curve. Where CAD is, it is also in a weak sense as far as the curve goes. But I would say Aussie weakest, followed by CAD, followed by dollar. And then it would be euro, and then pound, and then yen. And then again, New Zealand kind of gets thrown in there, but it's not considered one of the majors. So it's just going to get dragged along in the same sense that the Aussie is. All right. So that's what we have scanner-wise. Nothing really kind of stands out minus the strength that we have right now going on, at least on a 4-hour basis. And again, you see dollar CAD, but that market's just coming online. Aussie dollar, New Zealand dollar, again, both high curve. We called those bearish positions yesterday, and they are continuing. There's a little bit of a pullback on the 30-minute, but not surprising. I mean, it's you're going to have some, U.S. traders are just starting to come online, which will kind of mess with that. We're seeing data. We're seeing data across the board. So yeah, kind of interesting. Nothing, super surprising. There's a few setups out there, but for the most part, there's a bit of a continuation from what we saw in the afternoon yesterday into today. All right. So let us jump across. Click that back over there. Gonna make sure everything is good. All right, go to charts. So chart-wise, guys, you can see that we had this position yesterday. So we're sitting here right now. We're down here at approximately right about this 75.20. It's an area that we marked off. We mentioned that, hey, listen, there's a gap here. Again, right here was that gap candle right there. And you guys can see where price stopped and bounced off of. That was kind of a target area that we had talked about. Hey, listen, if price comes down, make sure you get out well ahead of that. That's why that blue bar is across. Here's where we are now. Yesterday we were sitting, we're sitting right in here, right in this level. And we did mention that there was a little bit of an area here. Make sure that you were out at your 1 to 3 range, right? And what did we do? We dropped below, we came back up, and we continued the pattern down. Okay, so again, kind of some of those telltale sounds. We mentioned just, again, be cautious because we got a little pop here, we got a little pop over here, and that's exactly what we saw, a continuation pattern. A retest back up again, and then it just continued to push all the way back to the downside. Now, where we are going into Friday, we are starting to get lower on the curve, right? Again, very, very high. We had 2 great levels that we wanted, and we were unable to get there. And now it's rallied all the way back down off of all this move, right? Now we were kind of back into this level that we had, earlier in the week, actually, I guess last week, right? Back into this kind of basing area. Now we have some levels down here. We marked off a level at 74.66, and I'm probably going to wait for it to come down into that range before looking for any type of a long, right? We got a little bit of a movement. We got to see if we can chunk through here, but really, this is based off of kind of a 4-hour level down here. And again, we saw that price had gapped into that zone, popped out, retouched the very, very top, and then kind of supported. So right around 74.66 is really the last time that we had like a really true kind of clean confirmation of buyers coming into the market. So it's kind of what I'm looking for. I want to see, how it's going to kind of chunk through this level today. It may not necessarily be the best trade on this one. And like I said, it may take a little bit of a pop. There are some buyers above. And even on the 30-minute, you guys can see that, you can kind of see where this big area piece down here, you can see that again, price popped and tested, price popped. And again, a little bit farther back is where we gapped into that zone. So there's something down in here. That's bringing us down about another 50 pips. Even if we went down for the rest of the day, that's probably more of going to be a Sunday open, something down in one of these zones, looking for some type of a pop. It may turn off this area. Again, we've had some supporting in this area. Would I be looking to take it long? Probably not, just because, again, we have this little zone here, which had a nice drive to the downside. So it may just consolidate on this yellow bar for the rest of today. But going to Sunday, I think 74.66 is what we need to look for. Switching back going to the Aussie dollar. Again, that's the one that continued to push down. We had this white box marked off when we were able to get some, good confirmation in. As you can see, this one did hit, guys. So this one, we are here at 8. And then yesterday for Chart School, we were sitting right in this area. So we had pushed down, made it about halfway, pulled back up again. This one, the only way to get into this was, again, there was a small position basing here. It was this wick over wick entry. And this kicked in late last night. It was about the only entry you could have got. With its proximity, though, being so close to the top here and this basic level, it probably isn't something you would have taken. But it didn't really spend much time there and literally just collapsed away to the downside. Now, it just bounced off a small zone as well. I would have to say this one, again, short. I feel like this one is, again, unless the U.S. news is really bad in an hour and hour and a half. If that manufacturing PMI is bad, then yeah, I can see this kind of going back up again for the day. If it's about what forecast is, or even if it's like 51, if it's really close, but it's above 50, I think that will kind of stabilize, and I think that trend will continue. But a lot of it's going to, a lot of it is going to matter on that flash manufacturing PMI number. Let's see. To get long in this one, so I can pull these two guys off now. Thinking, unfortunately, this is not. That's about 80 pips. So if you look kind of what we have in the rest of this white circle or the white square, there's not really much there. There's a small hiccup right there. I mean, this is obviously, you can see this little pushback. It's kind of based off of this level, right? Go a little higher. We'll just mark it there. You can see we had a gap into that. So again, nice push off of it. It tested it, and then it launched itself off of that level. So it's a level we got to watch out for. Obviously, it would be a target to the downside, but it could also be a potential area where we're looking for a bounce to go higher. Problem is, it's about 70 pips away. The daily ATR on this pair is only 64, so it's over 1 ATR away for what our movement needs to be. Put it this way, that manufacturing flash number would have to be like 60 for us to kind of be able to drop all the way down here. And if it did that, then again, it would be it would qualify for a parabolic retracement. Again, just because of the sheer magnitude of that move, I just think it's going to have a very hard time doing that much movement to the downside. Now, could this be a turning and flipping point? On the hourly, not so much. I guess it could, right? It could. There is a small zone there. But again, we got a zone here. If we go up about 25 pips, we're starting to go into this base and nice push down. This wick over wick that again turned it away. And then this kind of sideways drop, which went off of this zone. So even if it does, start to go higher and start to move a bit because of that U.S. news, I do feel like if anything, it's just going to start consolidating. I feel like it's going to start bouncing off those levels and then kind of turn and push. Now, with news today being at 9:45, it is rather close. It's 45 minutes from that reversal. Not to say that the reversal can't happen today, but it may be based off of one of these levels. So if that manufacturing number, again, that's this manufacturing number right here, right? And again, supposed to be 52. It was under before. It's supposed to be good. But again, if we come in at, 49 or even at 50, 2 points below would be a problem. 51 is probably not too bad. But what that could provide us for this pair is it could, not that one. It could provide us a bit of a jump up. And again, this news release, if it misses, it could move 25 pips in the next hour and a half, 2 hours. So it could rally up and it could position itself in one of these. And again, that could provide the reversal because, most likely it will be a temporary thing. Now, here's where the monkey wrench comes in. Okay. In looking at everything in what the news was and what's happened, I have not seen anything from senators yet to what that stimulus package look like. Okay. Have not seen it yet. Now, again, stimulus last week, it was like, yep, stimulus is coming in. And then we saw it go higher. And now it's starting to kind of pull back again because we haven't heard anything more about stimulus. But we have 1 week to go. Remember, it's Friday. Now is when they got to throw that idiotic kind of, here's our first draft. And we really thought hard about this. Yeah, and you added all this additional stuff in that you obviously know is not going to get in, but you need it for your base, right? That could, we didn't hear it yesterday. So the likelihood of hearing it today is probably much higher, right? We didn't hear yesterday. It's going into the weekend. It gives Congress time to digest it, right? To read through it, to see how great it is. So that could come in today. And also that could also provide a nice little pop up again. So, see what the news does. See if we get in a level. There may be something. I would definitely use something more shorter, shorter duration if you're going to choose an 8X to trade this one. And again, just make sure you guys do have valid stop losses in there. Make sure you know how to add stop losses because, this could rally up. It could be a nice little short. It could be moving in your direction like, yeah. And then all of a sudden at like 11 o'clock, Senator X may just say, hey, listen, we got a deal out there and it looks like this. We're going to send every American another $2,000 and then watch this thing go right through the top, right? Because again, these are tiny levels, guys. These are 30-minute levels. So that's the only caution again with the Aussie dollar. I think Aussie yen is a little bit more protected. Like I said, yen is good. Right now, again, we're bouncing this level. Yen is the driving factor in this one, but stimulus and gold is what's going to drive this movement. And again, these are very, very tiny levels. Something like stimulus, lots more money, sending checks to all Americans. Yeah, that will definitely, jack the inflation hawk's heart rate, and that will send this one flying. Okay. Now, euro yen, kind of the same thing, right? It looks very, very similar to the Aussie yen. Now, this one, again, here's that level we marked off yesterday. All right, we're sitting right here right now. Yesterday, we were sitting right here. Okay, we saw this push down, and again, fast push down, very fast. You typically expect a retrace, and what did it do? It came right back up. It touched right into this level. Again, it actually touched the little tiny zone, but we marked off the entire one, the entire yellow zone. And again, basically high inside of a 4-hour zone at a level that we were, again, failure to go higher. It had a parabolic move off of it. Again, much larger than we saw, kind of quick down, no wick, retrace back up again. And since that time, guys, we've gone all the way down 97 pips back to what? The origin of the move. Okay, again, parabolic retracement move across base with a failure to go higher entry, collapse all the way back down again. So again, yesterday off of that zone, there's one. This time, this was about noon yesterday, and it's done nothing but continue to fall all the way down. So there was your 1 to 3, your 1 to 5, and again, your target, as I mentioned yesterday, needs to be at the top of the body, behind the explosion, and that's exactly where we hit. And then what do? We bounced and bounced and bounced again. So I do see this one making another attempt down. I would probably not be looking for longs off of this area. Remember, we do have this little area of interest below, but the way that the yen is moving, being Friday, being that Europe is out of the market very, very soon, I definitely think that this one, I think we could remove this and start looking for some type of a push lower here, right? The 1 to 3 is a little bit long on there, but I do feel like there could be a Harry Potter setup on this one, which would coincide well, again, with what I feel like the market's going to do overall today. Again, stimulus coming in, I just don't feel, I feel like to sell any stimulus package, they're going to have to justify how bad the market really is right now. Remember, this is a stimulus package, not so much for companies. Like, I don't think there's much more that they can do for companies at this point. It's more going to be for the consumer. And to justify a large price tag on a stimulus bill, what do you need to prove? What does everybody have to feel? Holy crap, the world is ending. The sky is falling, which I don't think it's going to do much for, again, the stock market, which, again, I think is going to stimulate, the yen currency pair. So, again, it does kind of coincide with what I feel that the news and everything, trading is going to be. So, again, if it goes long and we don't get an entry, oh, well, no harm, no foul. Again, you could take it if you wanted. It is a valid area. It has tagged it a few times and it is held. So, you may want to take it off of there. But like I said, I think the safer play, particularly on a Friday, and you guys know I'm not the biggest fan of Friday trading after like 10 anyway. Again, look for some type of a short entry here. And again, this is one I'm going to follow. If this was down here, then I'd be much more willing to do it. But this is really kind of the middle of the kind of top and bottom of this chart, right? I mean, bottom obviously is over here, but we had a lot of basing, and this is really the first kind of push, the first retest. It's a lot cleaner down here versus taking kind of along in the middle of this range. I mean, when I say curve, right now for me, I'm kind of thinking that this is kind of what my curve area is, right? This is an area we had basing, and it really kind of from a base to a top. I would draw my curve here, and right now, again, we are in the top. We're basically in the upper of the middle area. So ideally, it's still more towards the shorting side versus the long side. We're kind of in that no man's land. So I like it more for kind of a continuation to the opposite side. Like last night, yesterday, what we're talking is this is what the curve was, right? we were looking for sells in the top because, again, we were looking for a push down to this area, there to here, right? To there, basically here. Bottom 33%, top 33%. We're in the bottom, and again, you could, potentially go long in this one. But I just feel like, the way that this area has reacted already in the overnight, I just don't think it's going to be able to sustain too many more hits to the downside. And where price is reaching right now, again, we've seen it force down here, and again, force down here. So, it may take a bounce, sure. It may look good, but I do feel that there's negativity coming in. And I do feel like there's going to be a little bit more yen kind of strength in the overnight. Again, just my thought. Nope. Fisher, I cover the indices second. So if you can see on the bottom of the chart down here, I have 1, 2, 3, 4, 5, 6, 7 currency pairs. So typically in about 15 minutes, I'll start with NQ, SP, or ES, and then YM. And then I cover commodities last. I'll do gold, silver, and we'll cover on oil as well. Oil's been an interesting player. So watch out for this one, guys. Pound yen, very, very similar. I can remove this, but again, we talked about this zone being a target level. And kind of the same idea. We marked it off here, 135.28. You guys can see it came down and touched the 135.28 area. So we can remove that just to clean it, just so, again, we don't confuse anybody here. So this is what we're looking at. Again, we're looking for profit targets down into this level. Here's that area of interest again. All right, so I don't know. I'm pretty sure somebody grabbed this one yesterday, but here's that area of interest. Okay, I'm just going to say it again. The old Harry Potter trade. Right there. All the way down to the 1 to 5. So it happened again, guys. Hopefully you guys were able to grab this one. You got the nice touch. Again, prove that area of interest. Again, that was where our short target was. It popped off of it. Yes, yes, yes. Came down again, punched through. Yes, yes, yes. Pulled back up. Yes, yes, yes. Went all the way back down to the 1 to 5. And it just happened to, it ended up not going as far as I wanted it. But again, the setup was there. So hopefully you guys grabbed it. Again, this was an easy one. This was about 30 pips on one. Actually, I think the 1 to 5 was even 1 to 30. Yeah, it was about 50. I was going to say, I'm pretty sure that was higher to the downside. So where we are now. Could we take that level again? Probably. It's probably okay for one more hit. Obviously, the pound is running out of time here. It's only got a couple hours left. It's going to lose everything, and it's going to be purely based off of the yen at that point. Again, I do see that, we're in the after hours now. It is kind of rallying back a little bit. And again, that is because the pound data is great. It's still down for the day, but you can see since that pound data came out, it's been rallying back up again. The pound data will probably, the potential of that will probably run out. And again, that's where we're going to see most likely that yen kind of strength come back in again. And again, this is an hourly chart. In an hour from now, if we can pop up, yeah, there may be one more touch out of that zone. Okay, but again, that's why we mark off these areas of interest. And again, this is where its base was. There was a touch once. This was a touch again. It came back up again, kind of touched it again. So there's 2 or 3 in here. But again, at its easiest draw, 1, 2, and 3 is what the breaker was. But there was obviously a push back up again, and a push higher and made another attempt down here. So it was technically the 4th touch of that hourly zone. Okay, just for those guys that do track that as well. Now, as I mentioned before, we are kind of in the middle of the curve, so it's more of a continuation pattern, not a reversal area for me. Again, this was a nice target to the downside, being able to take those shorts, but again, it also gave us another entry to the downside. I think it's important to keep these 2 areas marked off, 137.25 and 134.25. We are in the middle, so again, we really do need it to rally up and down. It's most likely not going to do it today, but again, we may get a push towards one of those sides, and it's areas we need to keep on our charts. Make sure that you have them. Again, they are kind of hourly and 4-hour overlap, so I think both of those are really important. But right now, we're kind of in a chop, and again, if yen strength comes back in, I do think we will push back down. There's not a lot over here on an hourly basis to kind of hold it up. So, it could be a nice day. Again, if that's a catastrophic number, this could obviously push down. Now, a little bit different story over here. All right, so we had marked off some areas. We talked about 27.53. Now, we had really pushed away. Here's where we are right now, and here's where we were yesterday at this time, right? Right here. So we had pushed all the way down, and again, we talked about this being a parabolic move off the top, right? Well, we wanted to go a little bit lower, and it was kind of like, hey, listen, we are collapsing. Unfortunately, we didn't get the entry we wanted. We were looking for a little bit farther down, and bam, it shot right back up again. It went right back into the 2753, and from that level, we just kind of stop and move sideways. So we push down, we push back up, we push down, we push back up. We're still stuck in that same level. Looking at a 4-hour basis, you can see there is a daily zone up here. There's some basing here, so it makes sense where we are at, right, to have major issues. I mean, obviously the lows are getting higher, but again, very high in the curve. This is an enormous daily zone, by the way. It's like 90 pips. Would not take 90 pips risk on a pound trade, but it does make sense. Everything is lining up for them. All the data was great today, so it's pushing higher. We've had obviously dollar weakness and all of this. Again, I would assume that this is eventually going to break higher here because again, we've had this turnaround point. Excuse me, I think I marked it off yesterday, but there's your point, right? Front run, tag, tag, tag. So I just don't feel that this area, again, these sellers up here, I just don't think they're going to hold much longer. So I do think we will drive higher in this one. Could we have a little bit of a pullback in this one if we have great U.S. data? Sure, we could, absolutely, we could, and that would be great. I would love to find another area where we can go long, and again, it may be here. Most likely, though, most likely at this point, the fact that we got run again here. Again, I told you there's two levels. There's one here, which is this. And here, let me extend this across so we can kind of keep this one, consistent. I do think that level is important, right? The 2629. But we also should keep this on our radar. Okay, it has been a double bottom. It did get pushed really deeply, but again, it did get front run. So it's kind of like, yeah, we got to keep it marked. It could be an interesting place if we do get phenomenal U.S. data, and this does flip because we run out of pound strength. Like their data has already been used up for the morning. Their energy, right? If we do get a pushback down today, again, and we close somewhere in this region in here around 126.97, right? 127-ish. If we can get an open in 26.57 or 26.29, I think either of those would be great longs on Sunday night, right? Remember, when we open up into prior week's levels on Sunday, that tends to give us a nice little, at least opening rally. What we could see, all right, and again, this is what we could see. Great U.S. data, we could come down and here, I'll change the color of this so we don't absolutely confuse everybody. But say, this is our closing candle on Friday, right? And if today we close here and we open, say we open here, okay? That gives us a good ability to be able to take limited risk and play a retracement right back up into where we closed on Friday, okay? Where the heck is green? There, dark green is fine, whatever. All right. So that's kind of what I'm looking for on this one right now. And again, this is under the scenario that we have great U.S. data. We run out of energy for the pound. We take a retracement that these sellers, step in one more time to save this thing, even though it's been punched. We come down, we close, we open in one of these two levels. We look for a rally back on Sunday night into where the gap started. Okay, so that's kind of what I'm looking for on the pound right now. Whoops, I'm going to delete all that. That's fine. Those two are good to delete, and that'll come back again. Oh, wait. Right there. Sorry, guys. So that's kind of what I'm looking for on this one. Euro pound. So euro pound for the most part, guys, you can see it kind of going sideways. Again, we got a bit of a rally up, since we got the pound data. Again, the European data was great. It went down. We got the pound data. It started to pull back up again. It did actually bounce out of a zone. And again, we had marked off that yellow zone before as an area that we had to keep, had to keep watch on. Kind of an interesting placement of it, though. Not necessarily a long entry. I still think on this one, mark off 93.32, 90.11. We got a bit of room to run in either direction on this one, but kind of the same scenario. We can see where this one opens up over the weekend. We do have this kind of target sitting right here, this 90.67. It's in range. I mean, either both of these currencies are about to kind of expire, right? But we got 30 pips down, 30 pips up. If we can travel those 32 pips or even open in one of those two areas, and again, that could be, we could get news later. I mean, we saw that, the European Union saying, hey, listen, we're going to impose tariffs if you guys don't want to negotiate. Okay, great. You want to come to the negotiating table? Great. We could hear news Friday, like late today or this weekend that, we are going to be, we have negotiation meetings set for, Monday morning, right? Well, that's great. That'll give us an initial response on Sunday night. Probably Euro strength that we have that, that negotiation talks, that could open us up here and also lead for a short going into Sunday. All right. So again, that's why I'm leaving these two on there. Keep them marked 91.32 and 90.67. And again, that's a Sunday night play. But at this point, you guys can see it's more or less just basing sideways. It's had a little bit of movement. In 24 hours, it's gone down 8 pips total in 24 hours. And again, what do we see? A little bit up, a little bit down, and then a little bit back up. Retrace it to the exact same spot that we were yesterday. Okay. Again, it's got to move. It doesn't move. Again, we're not making money. Euro dollar. So, euro dollar. We were talking yesterday about, and I said I was very clear. We need to make sure that we find the top of the euro dollar. Okay. We may be at it, and I said this could be the position. And again, there was a very short one, right? We could have played this very, very short here. Kind of it dropped down, pulled back up, and then ended up dropping, right? Here's where we are now. And then when we look back yesterday, we were sitting right here at 8:30. So we had already completed that. Said maybe it's good for one more, but again, the original trade was where this was set. Look at that area though. Okay. Look at this area, and here's why. And I'll tell you in a second why I want to keep this area marked. Right there. Change this to, whoops, not that one. Blue, yellow. Okay. Right there. Okay. We put that failure to go higher, entry in, boom, down. Touch again, down. Grab it again, down. Came up, based in it this time, up, pulled back down again, based. Little bit of a pop up, drop, base. Dropped up, touch, base. Drop below, went right above again. So, is this an area that we need to keep our kind of attention to? Yes. Is this an area? Yeah. Yeah, this is definitely an area of interest, okay? Now, are we going to be taking a lot of trades off this one? No, right? No, but we need to watch out for this one, okay? So this is going to provide some insight. Again, buyers and sellers on both sides. This area keeps flip-flopping back and forth, so, keep it on your radar, okay? So we'll delete this. You know what? I'll leave this area here. I'm going to delete that. So this, again, that was the original short from here yesterday. So what do we do with this now? I would say I'm kind of in the same opinion that I was yesterday. If I had to make a call right now, I would say on a technical level, it does look more like kind of what I'd be looking for is, we had a nice push down. It didn't quite make it back to its target, and then it popped very fast, which again, typically is kind of a parabolic entry that we're looking for in a retrace. It has not retraced back down. So kind of things that I'm looking for is kind of a retrace back into kind of in this level. Right, again, sellers have stepped in, and it's really only barely touched it. Again, this U.S. manufacturing data could mess this up because, again, this is a very, very tiny level. I mean, we're talking about 6 pips on an hourly chart. That's small, right? But we are very high in the curve. We are sitting inside of a daily zone still. We did punch into it, and again, put that lower high in on the 4-hour time frame. So I'm thinking, again, I am thinking bearish bias. We do have this area, though, that has really played kind of havoc in both directions, to the bottom side and the top side that it's been pulled back down in. So it's kind of one of those things. And again, we could refine it on a couple different levels here, but I'll just leave it on the hourly. I'm kind of waiting for a bounce. I'm not going to trade this top bounce, even though this has been a good level. What I'd probably do is kind of refine this just a little bit more, probably in this level. And again, that kind of marks off the bottom basing here. Again, use the top here, the top here, and the kind of the wicks here. I'm kind of looking for somewhat of a bounce, and then I'm looking for somewhat of a continuation down. And what this does, if we can get this set up, it puts the 1 to 3 again before the buyer stepped in here. The 1 to 5s are slightly past, and again, overall, I don't think this is a bad target. The 115.32. That's the last time we really saw any basing, a drop, and a spike. Again, this was just a quick kind of news boom, boom type situation. I think overall targets need to be 115.23, but I do think if we can get a continuation out of this zone, right? And again, we've done a couple different bounces back and forth on this one. This could be an interesting strike if we get a turnaround. And again, maybe the US data comes in and it's good, and that gives us the spike below, right? Gives us a spike below. We can get that emotional play, a pullback, and then again, we can get a pushback to the downside, right? That's about the best way I see this one. Again, like I said, I don't want to be calling the top. We know that this area has given many, many problems. There was quick trades out of it on both sides, But again, you got to respect a level when it literally has been, framed the way that it has. I mean, it's been framed on the 30-minute, on the hourly. Again, you can see, entries here to the short side. Again, it kind of based sideways here on the 30-minute. Touch the bottom, touch the top, touch the bottom, touch the top, touch the bottom. And again, it's peaking out both sides. You just got to respect it, right? You got to respect it. So the bottom of that zone is approximately 115.89-ish area. And again, depending on your, how your candles are drawn, you can mark it off from the 30 or the hourly either way. But again, Harry Potter continuation breakout to the downside is, I think, what the highest probability this one is. But again, right now it's like trying to call a top on there. That's why I'd like to get a confirmation pattern off that top bounce. Okay. Now, Dollar Cat. Dollar Cat has taken a little bit of a bounce as well. So we talked about having a kind of a basing level here, but not really loving it. Because again, we had this pushing and there was more of a zone here. So here's where we currently are. Yesterday, we were sitting right here, right? Kind of right in this kind of same bouncing area. We mentioned we wanted the zone down here is what we were looking for. It ended up hitting it. I mean, it came right down. It rode along the top. It formed a new level and it pushed higher. I just see consolidation in this one right now. Again, there are sellers here. There's buyers below. So we are kind of wedged right now inside. I mean, it's about a 60 pip range. So, I mean, it's not horrible. But right now, actually, I thought we moved this yesterday, but we were looking for this as the sawtooth pattern. Right there is what we're looking for. Not the basing here. Right now, I'd say I'm probably more short this position. Again, this would be a dollar weakness play. Unfortunately, the CAD is kind of weak across the board, so it's not the best counter trend, the counter base pair here. But I do like this one back to the downside. I mean, I think target-wise, guys, if you're looking to take this one short, I mean, I think your target needs to be down to this 133.65. If we can continue to float around this level, again, it's been tested, it's been hit twice, it's put a lower high, and again, you could redraw this one. I could take this on this and say, okay, listen, well, there was our one entry, right? It'd be right there. There's our one entry, but I could also say, hey, listen, what about this new zone? Is this a failure to go higher here? And the answer is yes, right? The answer is yes, based off of that level right there. Right there, right? Again, rally back up into a zone, refined our risk, made it a little bit smaller. So I would say targets for this one on the downside are 133.65. The news could absolutely, without a doubt, drive this down. Again, that services data comes in bad. Yeah, it's going to probably hit. And that'll be it. And then I wouldn't do much with this one because I think it will kind of, I mean, it'll stay in whatever trend the media takes it today, but I think that's a safe play. Taking this one to the downside, 133.65. For Sunday opens as well, you guys can see we have a very, very large, I mean, from here up, it's about a 70 pip zone. 4-hour zone. So Sundays are going to be a bit difficult. But again, if we kind of end down here at 133.65, I definitely would be interested in, maybe taking a gap into that zone, retrace back on Sunday night. I do like the way that this one formed. I like that it kind of had a pretty decent, kind of base. The risk is not high. It's only about 16 pips. So I'm definitely on board with that one. So I think there could be some Sunday plays, but I think the play today, this one is definitely, short from kind of where we are now down to 133.65. Dollar yen. Look at this. Hammered. So here's where we are now. We were right here yesterday, right here. Okay. And we talked about this zone. We said, hey, listen, watch out for this one. As you guys can see, we did get a push down and a pullback. Here is on the 30-minute. It didn't really give us the true kind of entry back in. And we talked about wanting to take this level over, looking for a break of 106.99. Ideally, we like to see it drop and give us the good pullback. It just didn't. It just continued. I mean, it did base at the very bottom. So it's kind of like, did we get it? Did we get it? And, if you drop lower, you can kind of see here, it did drop below and it based. Didn't really give us the space, though. So it did what it was supposed to do. It continued to fall away. As you guys can see, we said, hey, listen, make sure you have your target set down at this lower level. And it did. It hit, it went up, it hit, it went up. And again, it rode the top, it dropped down, it had a hard time going through, it pulled up, retested, and then continued to push down by itself as well. So, it's continued weakness. We are approaching a level. I don't know if you guys can see it right here. This is actually a 4-hour level, which, again, those 4-hour levels tend to be pretty rock solid. I'll use this one right here. And that's kind of where we're at, right? So we have news in an hour. We're kind of flirting with that area right now. If this manufacturing data is good, if it does come in at 52, that will show, a bit of expansion. That should actually give the overall market the boost. which would, again, coincide with this one going back up again. So it's kind of set up for it to be a 52. Again, with the disappointment, I would assume that it would drop lower. Question is it going to be, kind of muted by the fact that this is a 4-hour zone? Okay. Now, on a daily basis, we are kind of still, again, we are sitting kind of here in the middle, right? 4-hour wise, again, you guys can see that there is that zone down there at 106.88. It is inside of a daily level as well. You guys can see that the daily level is from, daily is from here to here, right? Can you guys see the dotted line that comes across? So it's a refined level. It's, one of those ones that, people tend not to want to see. Let me hold this one here. That one we can delete. Let me clean some of these up just to speed this chart up. Oops. That one I actually would like to keep. Yeah, we'll just leave it that. That's fine. So that's kind of what I'm thinking on this one. It's lining up to be a fundamental long today, just based off the economic news. But like I said, the manufacturing number has to be good. It was good for everybody else in Europe as far as the pound goes, and it is pushing into the level right now. So it's kind of set up for that. There may be a pre-market trade in that one, maybe like a 2-hour binary. Unfortunately, 9:45 is a kind of a funky hour because it's deep into the hour. The start of the hour is always a little bit better, but you could take something in that one maybe to the long side. If it comes in bad, it's going to crash. I think it'll slow in here, but I do think we can push a bit lower. Like I said, I'm kind of yen bullish today. I just I feel like the yen, even though it's had such great movement in the last 24 hours, I do feel that because it has been negative, I do feel like the media, I think, will run away with this one again if that number is negative time. I think that's all we'll talk about is how bad it is, and like I said, they'll start bringing up Portland and this and that, and I think there'll be a lot more movement to the downside. Dollar Swiss. So here we are right now. Here's where we were yesterday. What I tell you guys, we're right here. Okay, what I tell you guys yesterday? Still bearish. Still bearish. Why? Because the U.S. and China are going to literally poke back and forth at each other. We lost another consulate today. Trump will respond because we always have to have the last word. But I said that, 92.40 was definitely an area we needed to watch out for. And what did it do? It came down and it's now literally sitting on 92.40, right? So obviously this one can, continue to have some negativity. If that manufacturing number is good, again, this one is also in an area where we have buyers. The U.S. is in the first position, right? Dollar yen, dollar Swiss. It's in the first position of both of them. If that data is good, it should bring some U.S. strength into the market. Again, that could provide us with the pop we need off of an area of buyers, right? I don't know that overall I would be long dollar Swiss though. With them kind of poking and prodding, I don't think that magically over the weekend we're going to have world peace. I think there is going to be some continued tensions in this one. I do think the Swiss will also continue to have some strength just based off of, kind of the European stimulus package. So I do feel that it will hold. Again, that's sitting down here on the 4-hour level. You can see it was in an absolutely ginormous level. We dialed it down and found this 92.40 zone. And again, that's literally what we're pushing on right now. But as I said, I do feel that this will continue to push. And I do feel that this will go a bit lower just based off of, the kind of geopolitical events that are occurring right now. Like I said, maybe Trump says, I'm not going to negotiate with Europe. I'm not ready. I don't like it. That would also be kind of also a boost to the Swiss, right? Because again, when the president pisses everybody off, that tends to not be necessarily good here. But we could get a bounce. I wouldn't trade this one on a Friday. I just, again, with the Swiss close, the U.S., this one I think, though, will be very interesting over the weekend. I do feel that we will get a nice gap in this one. I don't know what side because, like I said, I do feel that Trump is going to have to respond back. If they kick us out of one, we're going to kick you out of two. So, again, that'll be the weekend stuff. You know how, Twitter is on the weekend, right? There's all kinds of plays. And again, this is why, guys, I do not hold things over the weekend. Too much stuff happens on Saturdays, right? Russia always invades people on Saturdays for a reason, to play with the markets. So, still bearish, not necessarily instant trading it. I just think there's too much risk. So, jumping across an NQ. Look at that, guys. Look at that. So, mentioned yesterday that we had a zone down here that we liked. It wasn't bad. It had already been hit one time. But look at the collapse in this thing. There was just no stopping this thing, right? There was just no stopping it all the way down. And again, on an hourly level, we talked about how this was such a big burst up. We had to make sure that we had, some type of profit target down here. and it fell not only through this first touch, and again, it did get front run and push back up again. So this was actually hit number 3 off of that level, which again, not necessarily surprised that it triggered at that point. But again, here's that that kind of rollover that we talked about. So here's where we are right now, right? Well, let's get our timer here. Here's where we are now, and here's where we're sitting yesterday. Okay, right in this little basing level. Now, dropping it down to a lower time frame, you guys can see we were sitting right about here. Okay. Mentioned that it was going to be a media story all day, right? Yesterday's news, and if you guys are kind of confused about yesterday's news, this is what it was. Higher than expected. Again, we knew that. We said that it was going to be higher. And then this kind of came in, right? And then it's like, ooh, it's like a boom, boom right on top of each other. Two negatives. What was the media going to do? Man, they were just going to talk. They were going to jabber, and that's what happened. So it was kind of a 1-2 punch here. We got the retrace, and then second guy came in, and that was it. Media off to the races. So where do we go with this now? It's kind of an interesting spot, right? So we're definitely pulling back. We're nowhere close to these highs. We do have a big level coming in down here. This level is, and again, I'll move it across just so it's easier to see for you guys, but it's approximately at 103.39. All right. We're at 10 on the ECN data. We're at 104.75. It's a little bit lower than that. Because again, the ECA data is a bit high. I would say right now, based off of what we've seen in the morning, we did have this pullback. And again, news will affect us, but I mean, we got a zone sitting right there. Okay, we got a zone sitting right there. We've made a push up into it. It drove us lower. And again, we have it. This could be the impulse correction, impulse move, but it could also be, hey, listen, this is our retest. This could be our red impulse move, right? A green correction to a push back down to this 103.39. I happen to feel that that's what the play is going to be like today. And as I said, I could be wrong. I don't have a crystal ball on my desk, but at 9:45, when we get that manufacturing flash PMI, everybody else's were great. Is 52 a bit overzealous? Is it enough to suddenly say, hey, listen, let's turn it around? NQ is going to be positive day because manufacturing is great. I just don't know. Like I said, if we miss, we come in at a 50 or a 51, and we give any type of negativity to the media, I don't see why this won't hit 103.39 today. I just don't. I just don't see how it's going to hit. And as I said, if we do get a pop, we got a level sitting right above it as well. 4-hour wise, like I said, there's a little bit of a basing level here, right around 105.50. That level. And even below. If the news is horrendous, I mean, we don't have another level below this until kind of this zone, until we get to this level of basing right here in this pop, right? So the next level is kind of 101.50. I mean, I guess we could go down there today, but holy crap, that would be a rough weekend, right? If we drop that much today, it can obviously happen, but man, how about going to the weekend at 101.51, right? Yeah, that would be kind of rough. In which case, again, this is a zone targeting for shorts, 103.39, and if we can punch through this, which again, it probably will, there's a little bit of a level right below it that it'll bounce off of. But there could definitely be a bit of a Harry Potter trade coming in here, looking to take over, again, I'm just rough drawing it, but approximately something along those lines, right? 1 to 3 would put us right before the next zone at 101.51. So interesting trade setup to the downside. As I said, that manufacturing number is going to give the media their sugar for the tea, or I don't know, maybe going into Friday after the day we've had in the last 24 hours. Maybe it's some vodka for that tea, right? A little sweet, a little Long Island iced tea, maybe, going into the weekend. So we'll see, guys. I would definitely think I'm more bearish this position today than anything else. Now, S&P. Here's where we were yesterday. So here's where current price is right now and where we were yesterday. Let's see. 9, and you guys can see we were sitting right here. Okay, right here. I drew this yesterday for you guys and said, hey, listen, this is right before we were sitting right here. And I was like, listen, this could be the top. This is the nice push down. I felt like we were going to be negative after that unemployment number. I also said, hey, I just feel like this is going to continue to drop. Make sure you get out. Make sure you get your profit before 32.54. And this sucker tanked all the way back down, right down to the 32.11. Then we said, hey, listen, top of the curve, make sure you're out. This is an area of interest. Be cautious with it. Overall profit targets were down at 32, and look at it. It came all the way down. So there was our draw from yesterday morning. It collapsed all the way down. Now, this is a little different, right? NQ, it came down, but again, its best targets are still a little bit below. I wouldn't say that it's fully retraced on an hourly, right? On the 30-minute here, we have kind of now retraced all the way to the bottom side of this curve, right? I'll bring it back to an hourly just to keep it consistent. But where the other one is kind of here, it's got the best targets below. This one has already kind of gone off its targets, right? We had a gap up in this level here. And again, rock solid level, hit, bounce, hit, bounce, hit, bounce, all the way up, hit again, bounced again. Made an attempt, didn't quite make it. Again, we were looking at that 32.11, and that's kind of right where it came in at. It didn't even make it back to this hourly level. So it does have, still a decent amount of room to run if it has another push down, but it's in a slightly different position. Okay. It does have areas here that we would be willing to take longs if we can get to it. All right. Now, I do think that this one, again, having this kind of push up, and again, this is a pretty big draw down, and we're already getting red again. It doesn't have the same level. Like, I think the NQ, grabbing some of these levels in here is better, right, on the hourly. On the hourly level here, it's not really grabbing much. There was a little bit of a level here, and we pushed slightly above it before we put kind of these ascending candles in. So I think of the two, I like the short more in the NQ. I think S&P is a little bit more resilient here. It did come off of a much higher quality level, not only a 4-hour, but it got front run on the hourly. So a little bit more leery on this one. But like I said, with negative news, I do think this one will come back down again. It hit our profit target from yesterday. It actually drove much farther. I thought this was going to be more of a target for today. And yeah, it hit today, but obviously the move was generated after last night, and that's where kind of we got that push down from. So yeah, crazy movement, guys. And again, that was a great draw, great short from yesterday. Hopefully you guys were able to make money off of it. So be a bit more cautious on this one. Again, bearish sentiment, but I do see that there, I do think there could be some intraday longs on this one. Maybe if we come down to this level and we get some news, again, around 10:30ish, we could have a potential kind of long bouncing off of, probably not the 32.11. We've kind of hit that one. This long may actually be down here at the 32.04ish range. Okay. Now the Dow. So we're sitting here right now. Yesterday we were sitting right here. Okay. It was the same thing. We talked about that 27.110 or 10.05 or 10.5, and it did the same thing. We mentioned that we were bearish. Again, profit targets are going to be at 26.73 and 26.55. 26.55.2, and that's the exact area that we took a bounce and pushed lower. Now, this is in the middle of the curve. This one also, I do believe that profit targets need to be a bit lower. I do think that we can come into this 26.158 range. On a 30-minute level, you guys can see that it doesn't have as much, but it does have a little bit above. And again, this one may also have had the kind of failure to go, push here, right? That may be where the entry is. Only thing I'd really be cautious, and it should, I guess it won't, yeah, it will delete that one. Only thing I would be cautious of, if this was not a horrible level put in, it did push down, it did break a level with it, it did base, and it did punch back up again. So we may have a little bit of a hiccup off of that one. But again, there may be kind of a position right there. And the 1 to 3 is in a good location. 1 to 5 is a little bit riskier, right? It is kind of flirting with kind of this basing here on the hourly. But again, manufacturing is going to be more of the three indices. Manufacturing number is going to be more associated with the Dow than anything else. Again, this is the industrial average. Manufacturing goes more. This is more sensitive to it. Again, we don't hit that 52. This can drop. Okay, this is definitely in a position where I could see this thing falling. Could we hit 26.158? Sure. I mean, yeah, it's possible. I guess that we could drop that far. Looking to kind of, if that number comes in, maybe it does come in at 53. Maybe I'm a bit too bearish, focused, going into this Friday. But if it does come in a little bit higher, I mean, one thing you do need to watch out for is the level right here, right? There was a wick behind a wall. There was a base. It came up, it based in that level, and then launched itself. So the question is, even with a good number, will that give us enough positive sentiment to not only break the sellers here, but could we break this level? Question is, I don't know. That'd be kind of a bigger move. So I would say that shorter term, if that number comes in as expected, we'd be looking for something along those lines. But the big question is, if we can pop through that zone, will we get enough, kind of power to be able to drop one of those in there? And I really like where that 1 to 3 target is. That 1 to 3 target is in the ideal situation. It's actually, there would be the ideal. So it's ahead of it. But I think there's two different options on this one to take a short. And if it does break that zone, there's nothing stopping it until we go bunch. That would be an interesting way to end the Friday. Again, if we're able to break these two, it'll end up coming somewhere up into this range, because that's the next time that we have sellers on the daily. So like I said, a lot of it I think depends on that flash manufacturing number. If we can follow Europe's if we can follow Europe's suit, we may be good. But I just feel if that thing comes in negative whatsoever, I think this could be a big day. What do we got? I just got here. So a lot of hype around to see if you have good play on the market open thoughts. I can check Microsoft. Let me do oil real quick, and then I'll do Microsoft. That news comes in at 10 a.m. Is there a good link to get data quickly? As far as what it is, I mean, I use Forex Factory for it just because it's this is the easiest way. So what I recommend, YOLO, if you're going to use this for news, again, it does lay it out, but make sure that you log in. Okay, you guys can see I have Brian FX here. When you log in, it will make sure that it tells you what your local time is, because there's nothing worse than being in a different time zone than what the news data is coming out, and then you end up missing it. So it's free. Create yourself a profile. Make sure you set the correct time, and then whenever you log in, it'll tell you when these things are. And you can actually even set, I believe you can set alerts through here as well. I don't. I just have this up on my screen at all times, because you guys know me. I'm constantly using the scanner. I'm constantly using this for, again, talking about yen strength. It's very easy to see that we have yen strength here as well against this guy, because look, yen number 1, pound number 2. But wait a second, why is the pound negative? Because the yen is just on fire. Not literally. Japan is not on fire, guys. Just the yen. The yen is on fire. Because again, you can see all this dollar weakness, right? Dollar weakness, pound strength. Holy crap. And, again, I use the scanner all the time. So I use that, but make sure you were logged in, YOLO. Make sure that these numbers are right. Because you say 10:45, but it's 9:45 when the news pops out for me. All right? Write that across. All right, so oil. So we put this position up there yesterday. We talked about this being an interesting level. Again, this was an area of interest that we had before. It had many, many shorts off of it. A short base. Number 4 broke. We popped. Boom, 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 up. And I said, hey, listen, we could probably have a downside run on this one as well. So we did end up breaking through, and we came back up and retested it a few times. I hate that function. I wish I like the draw on it, but it drives me nuts sometimes. You know what? I'm just going to delete it. I'll just draw one here. I'm going to change this to green. I'll extend this across. Put it right there. That's fine. And then I'll delete this. Right there. So there was the box we drew yesterday. And like I said that this 41 area was going to be definitely something. This 41.20 to this one, what is it? It's 41.05 to 41.25 has really been a big range where, man, just price loved this area. And that's what we saw, right? Little break above, we pulled back in, drop, boom, it hammered down. And again, that's what we're looking for. We're looking for kind of a push to the downside. Ended up taking a great rally. Now, I did mark this zone off, and we said, hey, listen, we got some basing in here. We've seen that level. It actually missed the level and kind of got front run by just a tad, right? The pop was interesting. And again, here's where we are now. Here's where we were yesterday. I said, hey, listen, guys, I'm still bearish. I think it will come back into that level. We ended up driving down, pulling up, and then it took a while to get down to that level. I would have to say today, I'm kind of feeling the same thing. Like I said, this area of interest is the only thing that kind of messes up a downside trade for me. What I'm looking for is, look, we got a nice level here. I mean, there's no ifs, ands, or buts. This is a, kind of a nice area to be taking shorts out of. It pulled up. It was an area of basing prior, gave us a nice push down. Market's coming online, right? Retail traders are coming online. If we can get a little push up, that could give, that could be the next continuation of this. But, and I say but, if we set a trade up like this, remember, we are going to be messing with this area. And this area has been, tagged many times. Entry here, entry here, entry here, entry here. Break, pop out, pop out, pop out. So it's been a huge level that we've got to focus on. So having my profit target on the other side of it is kind of like, could it do it? Sure. I mean, this box, again, we could have used this box. We could have said, hey, listen, there's the level right there. Did it come down? Sure, it did. Again, kind of went out of the top just a little bit. So again, you're going to have to play that a bit. I would have to say, if we can get a little bit more of a rally, look for this thing to drop to the downside. Manufacturing PMI, it can kind of do it, but It's not the best for oil. Not the best for oil. And again, for me, Fridays for oil is always not my favorite as well. I think most of the movement has already happened. We got a nice little push off of this one. And again, you may ask, well, why did we get a rally here? Why did we get this rally over the last, 6, 7 hours? Why is oil spiking? Well, guys, that's pretty easy. All this manufacturing and services shows that the economy is coming online, right? When economies come online, what do you need to drive an economy? Oil. Hence why oil popped. Okay, but now, can the U.S. numbers screw this up? Yeah, absolutely. All right, so that will be the last one that we have sitting on ours. Let me see here. Somebody asked for, what was it, Microsoft? I think somebody asked for Microsoft. I'll go ahead and do that one. Who is it? Sneaky Bird, I thought you asked for Microsoft. So let me pull TradingView real quick. TradingView, let me pull Microsoft for you real quick, and we'll see where Microsoft is. Bam, there. Let me get a full featured chart. Pull this across. Yeah, let me see. All right, here's Microsoft. No thanks. All right, so, look at Microsoft all the way down there. All right, let me pull this one back up to kind of a higher level here. We'll look at this one on a daily basis. So, Microsoft is gapping all over the place. All right, so a couple things that I'm seeing right out of this on at least on a daily level, right? So obviously you had a gap up top. Not that one here. Obviously we had a gap up top, and again, that was an area of selling. Okay, you guys can see that we definitely had some selling there. Now, we did have an area below, and that's kind of, we pushed into that, and we're kind of sitting there right now. I'm looking for areas that are kind of clean, areas that we haven't retested. So obviously, we got a level sitting right here, and that's an area approximately starting at 94.91 that we got to kind of watch out for. And again, it's about $6 lower. Where we are now, again, price did push down to this level, and it kind of pushed out. So I would say, at least for the open, it's not in a bad area right now on a daily basis. Okay, now again, a lot of gaps all over the place. No, I don't want to open account. Continue. I don't need this one as well. Hide for now. They're going to bombard me with ads and make me buy it, and I really don't want to. I don't want to buy TradingView. So as far as the open goes, it's not in a bad place right now. Obviously, in the last day, it kind of went down, right? So let's drop this down to kind of a 4-hour, kind of get a little bit better of a picture of where that gap is. So it doesn't look as nice here, right? You're not seeing a kind of clean level, at least on the 4-hour basis. This zone down here, I would say, is still good. I would refine that one a little bit to the downside, or a little bit, on both sides. And again, it's been tested once, shows us that there are buyers, kind of stepping in right at that 194 area. Let's drop it one lower down and kind of see what we got. So, yeah, like I said, on a daily, it was looking good. You got a couple zones sitting over here in this 196 area. They're okay. Like I said, let me put a horizontal line just so we can kind of get a little bit better of an idea here. So it looks like there to here, there's a bit of a level, right? And again, what this was is it took a bounce off a higher time frame gap. It popped up at based. It popped higher, retested it, showing us that, hey, listen, there are some buyers that stepped into the market here to drive this higher. That's probably the nearest term thing that you have. So I don't think that there's going to be much, and again, this is a nice little racetrack here. I don't think there's many buyers stepping into this from this 200 number. I think 98.04 is the first time that we will see some buyers in this level. Top side, if we do catch a rally, and again, we are kind of in this impulse corrective move down, I would say if we can get a pop up into this range, again, it's kind of a gap, right? There is kind of going to be a bunch of sellers sitting over here where we ended yesterday. But I would say ideally, again, you can see that this top level that we marked off, look at this. That's been pretty rock solid as far as, being an area of sellers. It rode down, popped it. Rode down, popped it. Rode all the way down. Woo! Popped it again, the top side. So I think longer term, anything around 214, I'd be wanting to get bearish on. I think intraday, if we start to push down, you may have some type of reversal around 198. I think a cleaner level that I'd be looking to get long in is probably 193 to 194-ish area. As far as this chart goes, let me see if there's anything sneaky on the 30-minute. No, not really. There's a little bit of a zone here, but nothing super sneaky. So for me, like I said, I think this top level here at 214 would be an area where If it goes there, if it has the ability to get up there, I'd be looking to take profits, maybe start looking for some puts at that level. Maybe even some spreads back to the downside. Again, lower your entry costs on spreads down because it has been kind of staying in this range, right? Not getting gigantic movement, right? I mean, it's not like it's in one day, it's going from here all the way down. We're not losing $10. But again, maybe get some, there's probably some weekly, bear spreads that you could put in, some put spreads in this range to the downside. Longs, again, short intraday time frame, maybe 198s. 198s to 196s, again, in that range is an area where, if you can get kind of and when I say reversal pattern, what I would look for is kind of a hit of this level, a little bit of a pop up, and then when it retests again, that would be kind of your punch through to the top side. Would be any type of a long. But, decently, I think you could probably buy some spreads probably down here at 193. All right. Yeah, I got into my call at 203 thinking that level would hold. Yeah, at 203. Here, 203 up here. It's been an area. See, okay, so here's the thing. You typically want these to be very, very fast, right? So this fast drop. This one kind of based a little bit, and it was a fight, but then strong punch out. When you look at this level, it gapped and it retested that level, but it did spend a lot of time there. Now, again, it closed back on that level, so you got to think, all right, but did it close in one candle? No. So it spent a lot of time there. It touched saying, hey, listen, there's some buyers here, right? But then what did it do? It came down, and it's kind of hard to see, but look at this. 1, 2, 3, 4, 5, 6, 7. So 7 candles, it was resting, and every time it comes down here, it eats up more levels over here. It's going, I'm taking more buyers, 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 taking more buyers. Eventually, these buyers are going to run out. Okay? And that's why I was able to gap past. Why? Because there was nobody else willing to buy it. Nobody else was willing to buy it until the price came lower. So it's kind of one of those things. At 103 level, it's been there a bunch, but once it started resting on here, you got to be really cautious because, again, eventually you will run out of people willing to buy at that level. And then what the sellers have to do, they got to lower their prices to find a buyer. And that's why you saw price drop lower. So, the way it's looking right now, I don't know. I would say that I would assume that it's going to continue to push lower. And if you watch my channel, you hear me talk about kind of areas of interest. A lot of times these areas of buyers then become areas of sellers. In which case, if this was an area of buyers before, right? If this is your area where, hey, we got lots of buying, whoops, right? We're going to stabilize. We're finally going to punch through those sellers. Woo, we did it. We pulled back down. This area of sellers that was driving this price down became buyers here, right? And then when it dropped down again, what did it do? It became an area of buyers holding it, right? Holding this up. All of a sudden, bam, we've dropped below it now. So you kind of got to think that this area, once again, will be an area of sellers. So it's kind of a 202.15. Could be an area of sellers stepping in again. So just be cautious with that one. That's a descending triangle, right? It's a bear signal. Which area? I don't know. There's a delay between when I read it, when you guys look at it. Are you talking about the candles, or are you talking about the sending this piece right here? You've watched my channel. Are you talking about this? That? Sorry, I think I'm wrong. If you were talking about this, yes. I will mention this a lot of times when the wicks go high. When the wicks are here and they go lower in a basing area, then yes, that's an area where I'm typically looking for sellers. Okay? Because every time they try to punch higher, sellers step in sooner. Those tend to be pretty good areas to short of. Yep. I guess a month out, it should be okay unless there's a massive trend down. I mean, sneaky, there could be. Like I said, it's kind of one of those things. The way that I trade and the way that I focus my positions, okay, is I don't assume, I don't make assumptions of what I think could happen a lot of times. I mean, I can use my assumptions to back up what I see inside of a chart. And what I can see is at this level, sellers have definitely stepped in, right? Because there's no more buyers here, drop lower. I can see that every time prices hit this level from this gap, it's been hammered down here. So, why I can say, I would say a month from now, COVID will be good. We'll have this. I should go long. But what I will say is, I know that if the market is negative, that manufacturing number is negative, the overall market sentiment is going to be negative. So if everybody believes things are negative, we could get a little bit of a bounce this morning, right? Right? We could get a little bit of a morning bounce. That's happened. But with negative sentiment, Dave, if the overall market is going to be down, everything is going to be down, including Microsoft. So that little bit of a bounce, people are like, oh, the market's negative. I'm going to short this at the open. That's why you get a bounce up. It goes to an area of sellers, and then it goes back down again. So, I have a lot of opinions of things, but my opinions typically are based around, I think it will do this. And if it does that, great. You have to be, in my opinion, an if this, then that trader. If price comes to here, look, it's not me predicting the market. It's not me having a crystal ball. It's me looking and saying, hey, listen, seller stepped in, seller stepped in, seller stepped in. And it's not like it's a slow leave, right? It's pretty violent. One candle, bam. This one touched it, gap down. This one did a little bit of a base, and then bam, collapsed down. This one, it just touched it, hammered down again. So, again, base it off of those things, right? And if you think about it too, I believe that there are definitely stages of the market. Okay. And as I'm explaining this, guys, let's go ahead and go ahead and get in for your tickets. Do me a favor, guys. Exclamation point ticket will get you in the drawing for today for 25 additional pip chips based, in addition to what you got. So I'm going to say it like this. There are different phases of the market. There are different times in the market. There's traders markets. There is investors markets. There are swing markets, right? You've heard about swing trading. I'm going to hold this for a couple weeks. Right now, we are in a traders market. We're not in a swing market. There's no benefit right now for you holding positions for multiple weeks in a row, right? What are you doing? You have way too much risk in, right? Way too much risk in. I mean, right now we have a great day in currencies, but look at this, dollar CAD. It's moved 3 pips in 24 hours. It's moved 18 pips in 24 hours. It's moved 11 pips. Does that mean that it hasn't moved at all? No. It means that price went down and came back up again, or price went up or came back down again. There are many, many, many intraday moves that are absolutely amazing right now to take, and they're easy. They're going off great levels. But had I been holding this for 24 hours, did I make anything? No. Did I make anything? No. Did I make anything? No. Here, yes. Yeah. But again, that's 1 out of 7, and that's been flat all week. Okay? So in your charting and in your analysis software, make sure you guys are using ATR. It's the most powerful indicator that nobody talks about and nobody uses. That's how to determine, again, was today great? Sure. Was yesterday great? No. We basically open and close, in 24 hours, kind of in the same exact spot. You take 12 of these candles. From here, you go across 12 candles, right? To right here. You're in the same exact spot, right? Go to 24 candles. It's right here. It's almost in the exact same spot. Was there a great move up? Yes. Was there a great short down? Yes. Was there a long reversal? Yes. So holding this for a long period of time, or a week even, this is where we were on Tuesday. We're almost in the exact same spot of where we were Tuesday. Was there amazing opportunity every single day this week in the Dow? Yes. But as of right now versus Tuesday, has the market moved? No. So again, we are in a trader's market right now cycle. Okay, we're going to have violent moves, COVID, the media, the election, China. There's so much going on right now, guys, in the markets. You got to learn how to be able to trade this intraday. And people will try to fool you and tell you that, hey, you know what? Day trading is for suckers. No, it's not. Day trading is the way to do it. Okay. Why? Because if I'm not holding positions, if I'm not in the market, I am not at risk. Okay. If I trade small term, my risk is tiny. Great. I can take my money. I can get out. And if I'm not in the market, I am not at risk. What happens today, right? You have your position in, you're looking to hold Microsoft for a month. What happens all of a sudden if Microsoft says that they just had a data breach, that 8 million email and personal information addresses got out of Microsoft, and there was an accounting irregularity, right? They're looking at their taxes, and there's an accounting irregularity in Microsoft. What is the price of Microsoft going to do? It's going to go from 200 to 100 in one day. And guess what? Doesn't matter if you have a stop loss or not, you are stuck, right? So again, that's why markets like this with pandemics and elections and stimulus mentioned in the next 2 days, protect your money. Your trading capital is your business. If you don't protect it, you're going to lose it. End of story. All right, guys, let's go ahead and do this drawing. Let me see. Where the heck is it now? I know it's here somewhere. Right. Man, I hit so many different things. I got to find it now. All right, let me start deleting. Let me start setting some of these down. You know what? I'll just pop another one. Let's go over to giveaways. Let's do it over here. I know I had it somewhere. Where the heck did I do with it? It's not there. Go back to my dashboard. Let's go back to giveaways, and we'll go ahead and do the drawing for today. All right, so giveaway. There we go. Looks like we have 8 people in total. We have 10 tickets purchased. Yesterday it was it Debbie or Marina yesterday? I feel like it was Marina yesterday. Yeah, it was Marina yesterday because Debbie was going for 3. So, just so you guys know what pip chips are, is they are the channel currency. Obviously, they're not worth anything dollar-wise. That's not how Twitch works. But by watching the channel, you guys go ahead and you accumulate these. Watching it for every 10 minutes, I think you get one. The giveaways that we do is for additional pip chips. You can redeem these things for personal mentoring, or you can do it for indicators that I use on the channel. Mentoring, we can literally talk about anything that you want. We can talk about indicators. We can talk about setups. We can talk about positions that you have. We can go options, futures, forex, stocks. Doesn't necessarily matter. Wealth management as well if you want. If you guys have portfolios you want me to look at, I can do that. It's really open to anything you guys want. Like I said, it's not considered, financial advice, but, again, I can give you my opinions on things and what I believe. I won't tell you what to do with your money. But we can discuss about anything you want. So that's kind of the biggest benefit for all the new people in. So with that said, I'm going to close this one down in 5 seconds. 1:30 is good for the morning. And bam. So the winner of today's drawing is, oh, by the way, next week I'm going to do a drawing for the weekly newsletter as well. Probably on Friday we'll do it. So next Friday, what we do is I do a weekly newsletter where I do positions and levels for the week. It comes out every Sunday night. I'm going to do a drawing for that next week. So I'm going to draw the winner for today's drawing, and it is Debbie. Man, I'm telling you, the women must be sharing secrets because Debbie won 2 in a row, then Marina won, and then Debbie just won again. Unbelievable. Unbelievable. And here's our leaderboard right now. Let's go across and give Debbie her 25. Debbie's right here. And again, guys, yes, Debbie dropped. You know why? Because Debbie is signed up for a mentor session. I'm telling you, Marina did one last week, and you guys can see what she's been saying in the Discord channel about how well it's been working for her. And now Debbie's doing one as well. So use your chips, guys. Use your chips. Start getting some mentor sessions and get those through. Will's the big daddy over here, but Will's got a mentor session he hasn't used because he travels so much, right? Will and Ernest are up top. But yeah, this girl right here, she's using her session. So, all right, guys. So with that said, you guys have a good Friday. You guys can see that the Dow is already starting to pull away. The news is not even out yet. So we'll see if this one ends up hitting our full profit target. Hopefully it's not negative, super negativity today, but, we will see. So you guys have a great day. You guys have a good weekend, and I will catch you guys back Monday morning at 8 a.m. Eastern. Take care.